Chris Pulver here with another installment of my Keep It Seriously Simple video series. This is a video series dedicated to all of you traders out there that are looking to be more profitable and more consistently profitable. Now, this is for any trader of any ability level in any financial market. Whether you're trading stocks, Forex, futures, cryptos, it's all about putting together the right principles, right tools, and the right foundation to be more profitable. Okay, so let's get started. Two things I'm going to tie in today in this lesson. It's going to be about equity management and growth. We can't have one without the other. Okay, obviously, traders start out, you might know that something like the Forex market is a leveraged market. You can take $1,000 and brokers will let you trade it and treat it like you have $20,000, $30,000, $50,000, depending on where you are in the world. You might have $50,000 and you can control $500,000 to $1 million out there in a $5 trillion a day market. Okay, so leverage is important. Leverage is a tool that we can use, but it works for us as well as works against us. So let's make sure that we focus on equity management, how to grow an account safely, swiftly, and responsibly. All right, so those are the two things we'll talk about in this installment. So let's focus on equity management. Now, I know that equity management is not that exciting, but if you're really going to make a run at being a full-time trader, if you want to do this for a living, you have to have some sound rules to follow. All right, I'm just going to keep this really simple. Trade small. If you want to survive in any financial market, trade small, trade conservative, under leverage, okay? If you trade small, here's what you're going to do. You're going to have time on your side, and you're going to be able to build up samples that tell you exactly how to be profitable, because you will see over time the same things happen in these financial markets. You will see what it's like to buy low and how price reacts off the support. You will see what it's like to sell high and see how price reacts off resistance. So you build up these samples, you gain confidence and see that price action does in fact do the same things over and over. But without time, okay, if we trade big, we over leverage. And let's say that we started trading and we had all the right intentions. You start with $1,000 and you over leverage that $1,000 and all of a sudden you're 50% down. Now you're 70% down. Now you're looking at, well, $1,000 just turned to 200. It either all comes back and I make my money back and I close out at break even or start making profits, or I'm either going to quit trading or I need to find something else to do. Okay? Too many traders fall into that first pitfall where they jump in, they have all the right intentions, and they try to grow their accounts very rapidly without any real education or any real knowledge on how to do it. If you don't buy yourself the time, you don't have any samples. You don't have anything that you see the market do over and over. You might literally sit in one webinar one time and somebody says, hey, if price breaks above here, you buy it. Sounds great. So the first thing you do is you see that breakout, you take the trade, they tell you where to put a stop loss, and then the market goes up, fakes out, comes back and stops you out. If your trade size is too big, this loss could be 10, 15, 20, 30% of your account. Now, what do you have to do to recover that? You need to make 40, 50, 60% back in your account that you've just started trading. Okay? So let's remember that to do this the right way, let's be responsible. So to answer the question, with my strategies and future videos that you'll see in this video series and anything else that I'm doing, when I'm talking about trading, I'm talking about trading that people want to do this for real. People want to do this for a living. People want to be full-time traders or live off of their trading income. The way to do that is to grow your account. Yes, it's going to take time. But basically what happens is as you grow your account, I will admit that in this phase of growth, you're going to have to be more aggressive. Okay, now I'm not saying irresponsible, but I'm saying if you want to take a $1,000 account and you want to turn it into $10,000, you probably have to be willing to take more risk. You probably have to be willing to take maybe a 3 to 5% risk on a trade. But I will show you how to do that. You don't have to take one entry, one stop, one take profit, and that's all or nothing. 3 to 5% whether you win or lose. You can space out your trades. You can trade smaller and build up these little positions. Okay? So the way I look at it is this early phase of growth, to take $1,000 into 10. For me, when I first started trading, I started with a live account, $2,500. $2,500, and I'll tell you exactly what I did. I scalped, okay? This strategy still works. I scalped, I had a $2,500 account, and I was trading basically to the zeros. I was getting in the Forex market, so I was using leverage. I had $2,500. At this time, I was in a broker that I believe was 100 to 1. So I could trade standard lots at the time. And I was trading $5 a pip, which it's a lot, okay? That's a little steep for my liking now. But I've also grown my account over the last decade, and it's a different story. But I started with pretty big trade sizes. But I also had a tight stop. So my strategy was this, and I'm not telling you to adopt this strategy. That is not what I'm saying. I'm telling you how I did it. I knew that I was going to be more aggressive in the beginning, and I'm far more aggressive here as I got started than I am now. Because now I have bigger accounts. Okay, that's my account now. Do you think I want to take the same amount of risk on this type of capital that I did there? No way. I live off this capital. Okay, I want to preserve this capital. I know that if I'm down to $90,000, I still have plenty of margin and plenty of capital to work with, but I am drawing a very tight line in the sand with my mistakes. So I need to make sure that I keep my gains consistent. Okay, so here's what I'm doing. I'm trading roughly $5 a pip. Okay, I have a 20 pip stop and a 20 to 40 take profit. Now, ideally, why is it 20 to 40? Because if I make 20, then I'm 1 to 1. If I make 40, then I am 2 to 1 reward to risk. Now, I can make a lot of money, and all of you can make a lot of money by going after larger wins than losses. A reward that outweighs the risk is the surplus that everybody mathematically should strive for. If you want to grow, if you just focus on that type of reward to risk, mathematically it's a lot easier to be profitable. The problem is not every setup is going to offer that. And I know that my strategy that I was initially trading was not offering that. So here is my strategy. Does it still work? You can look at it. You can be my guest. Forex. So let's take something like the euro dollar. Okay, euro dollar price is, let's say this is 1.10. Okay, so this is the exchange rate, 1.1000. All right, now I'm looking at levels. If we go to 1.0980, I was actually looking to buy it as price was closing above, and I'm talking about small time frames like 1, 2, 3 minute charts. As price is closing above 1.0980, I am buying it with the intention of getting to the zeros and possibly even through the zeros. As exchanges and transactions are made at these big levels and these round numbers, I'm looking to buy it as close as I can to this level, up into these zeros, and possibly even through the zeros. And so this was really, if I'm up above 80, then my stop, and I'll draw this in red, you can see this I think, my stop is here. That was roughly my 20 pip stop. So that's 1.0960. So I'm in, my stop, my take profit is at the zeros. I'm trying to, again, manage my reward to risk. I'm trying to get 1 to 1 there. And if I can move my stop loss and get this into a surplus, anything at, let's say, 1.1010, 1.1020, those are all surplus levels that allow me to make more gains and turn this into a much bigger win than risk. So this is my strategy. I'm taking $5 positions on a $2,500 account, and my risk is $100. Okay? If I am right, I'm going after a 1 to 1, so I'm up $100. If I can get to that, let's say 30 pips, I'm up $150. If I go after 40 pips, $200. Now, if you look at this, and this is a strategy that I was trading almost every day on the same currency pair. Now, every single day, if this opportunity sets up, I'm either going to lose $100 or I'm going to win 100, 150, 200. It really just depended on how patient I was. A lot of times I got myself out right here. A lot of times once I understood how to start moving stop losses, I move it to within 5 pips of this number and hope that it goes to that number or that number. I have a lot of +1s in my old journal. I have a lot of +5s and +10s in my old journal once I started using stop losses. And then I realized, just take profit. If I'm up 20 pips, just take profit. Why? Because this was a win percentage that was high. This is something I could win probably 60 to 70% of the time. So if I just mathematically stuck to my strategy and traded the probability, 1 to 1 allows me to make money. But what I have to do with this is I have to build a sample. I have to see this work hundreds and hundreds of times for me to be willing to take every trade. But here was my problem. I learned how to trade from a professional trader. This was one of his go-to strategies. What I wasn't prepared for was the mental hurdle of trading big trade sizes. I wasn't prepared to lose $100 mentally. Okay, so equity management, trading small, look, to me, this right here is not trading small. Okay, when I look back at this and I thought, what am I doing differently? You know, it's great to win. It feels great when you walk away with $150 to $200 or more. But when I started losing 100 and then the next trade is 100 and then I start second guessing that strategy, even within a couple of losses in a row, you start second guessing that strategy. Okay, everybody does it. Everybody, if you're learning something, you're going to second guess that strategy if it's not performing. So how do you learn how to trade? How do you learn how to take losses? We have to take them gracefully. It's not fun. I hate losing. So here's what I do, okay? My job early on was to be aggressive. So I was able to take that $2,500 account and grow it pretty quickly. I had some trades where I would just go ahead and set my buy order up. I would put my take profit at the zeros or through the zeros at 20 pips, and I'd put my stop at minus 20 pips. I had a lot of wins. I started to be more comfortable with the win to loss, even though it's a 1-to-1. I obviously wanted to make more money, but the reality was if I win, I win. Okay, and if I lose, I lose. But I was noticing that my wins were outweighing my losses. So the strategy itself was sound. I was growing my account. I went, over the course of probably 7 or 8 months, I went from $2,500 to around $9,600. Okay? It was steady. I mean, that's a lot of growth. Okay, but I also know that I was not trading small. Okay, this was over leveraging for this account, trading a $5 position. That's a lot. Okay, now this depends on where you are in the world. Some traders have 200-to-1 leverage, some have 100-to-1, some have smaller. I'll have other videos in this module or in this video series about leverage and margin. But long story short, it's not trading small. But I did grow my account. So as I was nearing the $10,000 mark, I didn't want to go backwards, right? So as I aggressively grew my account, I did not want to go backwards, and I started to. I went from 96, very close to $10,000, and I started to go backwards. By the time I started hitting $8,000, I started looking at this as like, look, this was fun, this is not so fun. I need to do something different. So rather than staying with the strategy, I thought about what do I need to do to make more pips? I've been in this market long enough to see the same things happen. I'm noticing where I can buy from and sell from. So what I started to do is I started to learn more. I started to go to other strategies. I started to spend more time with traders. And what I discovered is within my rules of equity management, I personally, and again, this might be different for all of you, I personally would rather make pips, okay? I'd rather make pips, which in turn give me the dollars and give me the percentage growth. Okay, if I make pips. So what do I need to do to make more pips? Well, for me to go after plus 20 or minus 20 is not really making pips. So what I basically summarize here is as I'm looking at 20 pips or negative 20 pips, what about 100 pips? And what about a minus 50? What about 200 pips and minus 100? What about 500 pips and minus 200 to 250, right? All of these are looking at bigger wins than losses. Mathematically, they give me the growth, they give me the returns, they give me the dollars, they give me the percent, but what they're doing is they're giving me a little bit more breathing room in the market. They're giving me a little bit more space to work. And what I started to do was gravitate towards higher time frames. So equity management for me has been trade smaller, make the pips, build positions, and give yourself the wiggle room to still go after nice chunks of profit, okay? Although, I mean, it'd be great if I was still trading a $5 position, but for me to go after 500 pips, I know that my risk is gonna be more than 20 pips, okay? Unless I get the best entry on a 1-minute chart, there is no way that I'm gonna go after a 10 pip risk for a 100 pip reward. Now, there will be traders out there that will probably have some system dedicated to 10-to-1, and that's great. But good luck finding it consistently. Now, mathematically, you don't have to win a lot to make money. That's the beauty of bigger wins and losses. But I like to win. You know, I want to trade with confidence just like everybody else. I don't want to tell myself and rationalize, well, I'm just one win away. You know, that's kind of like gambler's fallacy. I'm just one win away. One win at 10-1, and I got all my money back. Yeah, well, buy a lottery ticket, I guess. I mean, it does, to me, confidence-wise, it's harder to do that. So I know that I'm going to have to take a little bit more risk as far as the movement and the pips, but it's not risk in percent, it's not risk in dollars. That's all related to my what? That's all related to my trade size, right? So your trade size, your contract size, your positioning is all in how you're going to see those risk-reward numbers set up with your dollars and percents. All right? So that was really my, mental transition. And as far as taking a small account and growing it, like I said, you are going to have to be more aggressive. I would say for the trader, look, for the trader that wants to grow a small account, this is kind of a bonus segment, but I had a ton of comments. So speaking of, if you like this video, leave a like, leave a thumbs up, leave a comment, subscribe to this channel.